Hey traders, Raghee here. Good to see everybody. All right, let me see if I can get this. There we go. Happy Tuesday, everybody. Let's get a quick audio and video check in. Should be good to go for our December 22nd charts and coffee episode. Are we going to see a turnaround Tuesday into a Santa rally or not? So that's kind of the thinking we have right now, considering the overall uptrend that we continue to see. So let's go ahead and get to it. All right. So first of all, let's look at what we were sort of left with yesterday. And one of the conversations that I had in the free video, and if you're tuning in on the YouTube channel, you can access yesterday's free video there. And I discussed how really yesterday was not an easy day to get long in the face of the way that the market had sold off. And it's particularly difficult to look at the long side of the market if you forget about the daily time frame. Now, let's point something out here on this chart that you guys are looking at, and this is going to apply, of course, to traders looking at the end of day time frame, but also to traders that are day trading, right? And I'm going to highlight an area on the screen right through here. We can see, and this is the S&P, right? This is the S&P. This would apply to SPY, SPX, etc. You'll notice that the very bottom, down in here, there's an indicator where I start referring to things like double green. Well, this is a double green environment, okay? And it has been since mid-November. In fact, we've gone exclusively long on the indices since the 3rd of November. But once we go double green and we have a candle such as the one we had yesterday, that is not a reason to short. Okay, that's actually, it's a very abrupt move. It was a significant range. I say significant not because it's this arbitrary, oh my gosh, look at that huge candle. That's 128 points. But of course, we compare it. Let me show you here. This is the measuring stick that we use. It's a volatility measuring stick, which prevents us from sort of succumbing to all the hyperbole of, oh, it's tanking and this and that. Take a look at this, this graph. This is the breakdown of the 24-hour S&P market, hour to hour. During the opening range, 9 to 10 a.m. Eastern, look at our typical price movement, okay? The open really was not that volatile. So the opening range, the clearing range, was not that volatile. What was volatile was the session in its entirety. We just mentioned, what, 128 points? The typical price movement range is somewhere between 70 and 75. So that's where, if you say, Rag, but yesterday wasn't a normal day, you're absolutely correct, right? Absolutely. But we're not arbitrarily going to say that it is, and we wouldn't know. So let's think of it another way. If you didn't have a 75-point measuring stick on the market, at what point do you say this is an abnormal day? Well, for me, the 76th point is when we go, oh, okay, this is starting to act in a little bit more of an unusual way. 77, 78, 97, 98, right? I know that things are getting a little odder and odder, right? But you've got to have a level from which to say, okay, we've exceeded what we would normally do. Make sense? So that's where I'd say, yes, it was an unusual day, but that unusual day landed us in, this is a retracement. Okay. Now, turnaround Tuesday. I don't know how many of you have heard of that phrase before. Turnaround Tuesday is oftentimes sort of this reaction. There are intraday seasonals, by the way. These are things that I learned a couple of decades ago. It was something that I think I first read from Larry Williams. And you have these intraday seasonals. So if Monday's a certain kind of behavior, Tuesday will be a certain kind of behavior, or if the preceding Friday had a certain kind of behavior, it kind of suggests different potentials for Monday. Pretty cool stuff. And I think turnaround Tuesday really stems from that kind of intraday understanding. Well, I really love turnaround Tuesdays when they're essentially bracketed by an existing uptrend. We talked about why I believe this is an existing uptrend. Let's jump on over to the Dow, have the same conversation. An existing uptrend, so the sell-off in an existing uptrend. Then we've got this turnaround Tuesday tendency. And then add to that, on Wednesday the 23rd, we have the Santa rally, sort of that tendency officially beginning. Another thing to keep in mind, and we talked about this in yesterday's Charts and Coffee, that the week after the December triple witching, the Dow has been up 3 out of 4 times, 21 out of the 28 previous years. So 3 out of 4 times, the Dow is actually up the Monday after that Friday options expiration. So you've got a lot of tendencies added to the technical validity of an uptrend, and then a pullback into the range. So, those are things that I like to keep in mind. And like I said, I love this little, Stock Traders Almanac. Very cool to keep track of these tendencies. And then, of course, I've got lots of my own journals to remind myself to look for these particular setups. All right. So with that being said, I hope that gives you an idea of what I like to do on a day like that, which is certainly not short. I'm not looking to pick a top and own puts. I'm looking to wait for that opportunity for the market to come to me. Or the analogy, and I don't know if you guys can see this on air or not, but I keep a bat on maybe you can see that, but I keep a bat on my bookshelf. Yeah, you can kind of see it right up in there in the upper corner. Oh, there we go. And I keep a bat on my bookshelf to remind myself that I want to wait for my pitch. Not to mention, I love baseball. So wait for your pitch. And for me, the pitch isn't let's buy puts and wait for a move lower. For me, the pitch is let the move lower happen, thank the sellers, and then look for positions to get long in relative outperformers. Okay, so with that being said, let's grab some questions here. Thank you for making it out to Charts and Coffee. And let's see, hey there, Alex. Okay, question here is, does the stubbornly high VIX affect my trading decisions at all? No. My trading decisions are predicated on underlying market structure, volume, volatility, time. So price, volatility, volume, time. You might say, well, Rog, doesn't VIX affect your volatility assessment? Yes, as does information like this, right? My historical 6-month look back, daily price movement ranges, hourly price movement ranges. So kind of going back to the conversation we had yesterday about things like put call ratios and VIX, TRIN, skew, things like that. Very valuable, but they're more about the environment that we are dealing with, not the exact setup that I will look to trade. The setup's going to come more from time, volume, volatility, and price, but I'm not going to let the VIX dictate what I do. I hope that makes sense. So no, it really doesn't play a huge role. I want to be aware, as I want to be aware of the weather report, right? But not in a way that's going to tell me that I need to be short. In the face of a market, by the way, which is clearly moving higher in the overall path of least resistance. So great question, Alex, but not really. I'll consider it, right? I'll consider it. Okay, so next question. Hey there, N. Lewis. Do I think Costco is in the buy zone on my daily chart? It was double green. All right, let's go take a look at Costco. So 2 things I'm going to do with an individual stock. Of course, look at what's going on there. So you can see, yes, for quite some time, you can see at the bottom of the screen, it was double green. It went yellow. One thing, though, so N, good observation. However, this is what is an issue right there. What is that? This is earnings, right? That's my earnings. So going back where this was green, so that's double green, little double green again, to earnings. I will be flat by earnings. I will look for a setup after earnings. So I play what I call pre. So pre is basically sort of that run into earnings. If the market's in an overall uptrend, I will get out before earnings. So if earnings are before the bell, I want to be out very latest the session before. If they're after the bell, I want to be out that session. So I'll be flat into earnings. And then after earnings, I'll reconsider what I want to do. So earnings does, remember we talked about price, volatility, volume, time. Time is an event. I will be out. I will be out before earnings. And then I'll reassess after. So while, yes, it was double green, the disruption of that double green came post earnings. Now I'm going to have to wait for a different kind of setup. So terrific question. Now, relatedly, you might like Costco. And then what I do, and this is a big part of what I do in my option and stock trading when I look at end of day charts. So when you look at Costco, one of the ways you can look at it is also ask yourself, well, what's happening in the XLP, where Costco is, as you can see here, number 5 weighting, about 4.75% of weighting within the XLP, the consumer staples ETF. All right, so sip of coffee. Of course, after all, this is charts and coffee. What am I drinking today? This is I'm still doing the Ethiopian. I've been drinking this Ethiopian coffee quite a bit. Actually, a little cream in the coffee today. So getting crazy near the holidays. All right. So when I look at the XLP itself, I'm a bigger fan of, as we say, the tide, the larger sector. We have a long position in Coke in my Sector Secrets Mastery. We just built that yesterday. I like Pepsi, Philip Morris, Altria. Now, Philip Morris and Altria are positions that I almost always have because of their dividends. So that's a different conversation. But as trading stocks, I like them as well. So there's a lot to like within the XLP. Costco may not be right now where my focus is at, but I want you to know why my focus isn't there. So that's really it. All right. So thank you for the question. Great question. Very timely. Are my indicators available for Tasty? Hey there, Guy. The grab, the wave, propulsion. I'm not sure about Darvis, but we are here at Simpler. We are steadily getting our indicators into the charting platform on Tasty, which is fantastic. I know a lot of you use Tasty for order execution. And the charts are definitely coming along where now you can really do some great analysis with our simpler tools on them. But most of my tools currently are still available on TOS, TradeStation, and TradingView, and they're definitely importing them slowly but steadily into Tasty. So thanks for the question. Very excited about that. All right, next up is what do I think about the NQ? Oh, we did not talk about the NQ, did we? Sure. Yesterday, when the market pulled back, the NASDAQ did not get to the same type of zone of entry as the S&P and the Dow did, gang. The NASDAQ did not get down there. So from a relative outperformance standpoint, it looks great. It really wasn't rocked as hard as the S&P and the Dow. But it also means it didn't retrace enough for me to do anything with it. So with that in mind, when I look at the NQ right now, one of the things that we're doing is we're focusing a little bit more on the heavily weighted sectors and stocks within it versus the broader look at the NQ. XLC, really interesting. Facebook, also a big part of that name, where I'm not that interested in Facebook. And Google is oftentimes quite cost prohibitive for a lot of traders. But XLC is one way to look at this market overall. Problem is, let me warn you guys, on XLC, the liquidity on this ETF is pretty much nada. XLY looks great. XLY is a liquid options chain, consumer discretionary, relative outperforming ETF. And then when you look at the kind of stocks within it, which I've been a big fan of a lot of XLY generally, and many of the names within the XLY, along with yesterday's buy in Coke. We also bought, I'm actually taking a look here. We also bought Starbucks. All right. So we bought Starbucks. I'll have to take a look at what else we bought. Yesterday was a lot of great pitches, a lot of pitches swinging right over our strike zone on the plate. And sometimes those days that look initially very uncomfortable are really terrific. But as far as the NQ, Marty Jean, I like the XLY a little bit better than the NQ, and then I could also go down to a little bit more the individual stock level on the NQ, and probably find things I like a little bit better than I do the broader average, or at least opportunities. But any of the double greens look pretty solid. Apple's come back around, PayPal. Of course, Tesla has been parabolic for about the last 2 quarters. It continues to be the gift that keeps on giving. And I don't have a problem with the NQ, but I've been finding more opportunity engaging one of the sectors heavily weighted within it. So thank you for the question. All right. So let's see. Hey there, Becky. Let's see. Well, thanks, Becky. I've been trading for a while. You kind of pick up a few things over the course of 4 years. Moneyball and Pareto. Oh, nice. Okay. Do I have a top 5 book? Oh gosh, Becky, you guys can see my bookshelf back there. You know what I'm rereading right now? And it's not, well, one of them is one that I've reread over the years. It's Dr. Joe Dispenza's Breaking the Habit of Being Yourself is actually really, really good. And I'm rereading that one. And the other one that I'm reading right now, oh, here we go. This one's a quick read. This one is called 7.5 Lessons About the Brain. I'm actually rereading this. I read it over the weekend and it was really good. I'm just reading it again. So Breaking the Habit of, and these are non-trading books, of course. I was hooked on this book as soon as I looked at the very first chapter. The very first chapter is called, it's titled The Half Lesson, and it's called Your Brain is Not for Thinking. So I'm reading Breaking the Habit of Being Yourself and 7.5 Lessons About the Brain. Enjoying the heck out of those right now. Do I have a top 5? Becky, I just like to read. I'm probably good for 2 books a week. When I'm really reading, it's maybe 3 to 4, but yeah, I read a lot. Okay. And I try not to read a lot of trading books. I try to read books about thinking. I try to read books about gambling. I try to read books about poker, just not always compartmentalized in trading. And that's where we're going to wrap it up today, gang, because I am heading into the simpler options and the simpler futures room this morning. We're going to do some day trading. We're going to take a look at some hourly price movement range volatility. Some of you might be familiar with that tool of mine on the intraday time frame. So we're going to go do a lot of that this morning, maybe find some nice short-term turnaround Tuesday day trades. No gap psychology in effect this morning. Let's see where we're going to end up within the ranges of our volatility. But in the meanwhile, thank you as always for joining me for Charts and Coffee. Have a great day. Manage some risk. It's going to be a wonky week, gang. And I'll see you tomorrow, 9 a.m. Same time, same station. Be good to each other, gang. Talk with you soon.